Let's get more on some stocks in the move in Toronto, and we'll start off with the trucking and logistics company TFI International. The CEO, whom we hope to speak to shortly, calls the quarter a disaster. Stephanie Hughes of Bloomberg joins us. Stephanie, great to see you. Fill us in on TFI, if you would.
Of course, Andy. Excuse me. And it seems like disaster is kind of the way investors are reacting to TFI's earnings this quarter, given that shares fell as much as 21%, which was the largest intraday drop since November 2006. So it's been a while since we've seen a move of this magnitude. And that drop also dragged the stock price down to as low as at least October 2023. So for those who don't know, TFI is a transportation and logistics company. And there are a few things kind of working against TFI this week. It reported earnings this week, but the first knock against it was that its adjusted earnings miss after reporting fourth quarter results yesterday were really weighing on shares. Those results also prompted Bank of America analysts to downgrade the company to an underperform rating, just talking about how the sector as a whole was struggling. Further to that, TFI said it would be moving its headquarters to the U.S., which gained some criticism and ran afoul of its largest shareholder, Caisse de Dépôt, which holds 4% of the entire company's equity. So there are a few moving parts, and it seems like first and foremost, and perhaps most important of all, the earnings miss, and each of these moving parts appear to be taking a bite out of TFI today, Andy.
Yeah, we hope to speak to Alain Bédard of TFI shortly. And looking at his news release, he's even talking about changing the domicile of the company. So I'm not sure what implication that has for tax treatment of dividends, etc. We'll get him to clarify that. Update us on Manulife, if you would, Stephanie.
Sure thing. Yeah, Manulife is having a better day. Its shares are gaining by nearly 9% at its highest point, which was the biggest boost in just about a year there. That's because its core earnings of $1.03 per share came ahead of what analysts were expecting when it reported results after the bell yesterday. That earnings beat was really fueled by gains in the Asia and global wealth asset management segments. The insurance firm also said that it would raise its quarterly dividend by 10% to 44 Canadian cents. On top of that, they also announced share buybacks to the tune of nearly 52 million shares, which is about 3% of outstanding shares there. I did have a chance to speak with the CFO, Colin Simpson, yesterday after the results, and he really pointed to the earnings and share repurchases as a sign of optimism over the next few years, arguing that Manulife can continue its momentum that it saw last year well into 2027, where it hopes to meet its Investor Day guidelines there. So one issue that analysts flagged was that the core earnings and reported earnings had a bit of a sizable gap there, but they noted that this was a lot of this had to do with a one-time charge, and it wasn't specific to Manulife. This is kind of like an industry-wide issue, and in fact, Manulife was sort of outperforming its peers in that regard. So Manulife having a much better earnings day there, Andy.
Thank you so much, Stephanie. Stephanie Hughes of Bloomberg.